Greetings, this is Dr. Jeffrey Scott, and this is my Market MRI Pro weekend update. Title this, Does Friday's massive breadth move suggest a Santa rally? This is for Sunday, December 22nd, 2024, and you can use marketmripro@gmail.com for any questions, concerns, thoughts. As always, all these videos are for educational purposes only. The intent is to show you the tools of top-down analysis, how I apply them. Trading involves risk, and you alone are solely responsible for any decisions you make. I may own, intend to buy, or sell any stock mentioned in this report, and trading stocks and options should be considered risky, and you should consult with your financial advisors before making trades. Lastly, I have tools for multiple platforms, but I am an independent trader. I post this typically to my Google group and sometimes on YouTube. If you're seeing this and you're not part of my top-down trader group, why not? It's free. I'll get nightly rantings and ravings. You'll get discounts on any technology I bring to market, and you'll get first notification when I'm doing educational programs. This is not a sales presentation. Just go to Google Groups, search for top-down trader, separate words, join, I'll activate you, and you'll start getting emails most nights. Does a massive breadth, I spelled it wrong here, so I apologize, I missed the D. Does a massive breadth thrust suggest corrections over? This is from Jason Gopert of Sentiment Trader, commenting about how rare it is to have, in a 3-day period, the worst breadth thrust of a year, and then the best one, and then showed over the next 3 to 6 months, going back every time this has happened, very rarely has the market traded lower. I think that's a very important fact, and thank Jason for that. I also want to point out volume is going to be massive when you look at charts and indexes. It was triple witching. This is just from Market Surge, the old Market Smith rebrand. And you could see how much volume was up over normal on the NYSE and the NASDAQ. 1,408 stocks up on volume, 200 is a lot. 290 down on volume is a massive number. Just a ton of volume. We talked about the buckets when they hit 60, and that was a pretty good predictor that the market was going to reverse within the next day or two, and it did. And remember, this was the top 15 days going back 24 years for bad breadth. The leaders index, how predictable? Traded down to the 50 and bounced just about the 50. So it's down but not out. It's still going to have to clear its chandelier before it's all clear. But I use this as sort of a gauge of what the market is doing. The fact that it bounced at the 50 sort of fits the greater tone of the market with the breadth thrust that we saw. So still could be long. And then I guess that's it on the slides. Let's go, actually first let's go look in TradeStation, because I like how Sagar, I think he's best in the business when it comes to doing things like automatic trend lines and things like that. I thought this thing would reset, but it didn't. I'll have to make it. I'm just doing this real quick to get ready for what's going to follow. All right, so I may have to play with that a bit, but we'll come back to that. So let's go into the futures. So many of you who are on the top-down trader got an email from me at 10:30, because at 10:30, the futures gave us hammers. And we were probably sitting right about here. And when I saw that on all the futures, I said, this market's going higher, it's time to cover my shorts, and I'm going to let everybody know. So I sent out a little email saying that. Now the market traded higher and actually came back and closed in the middle of the range, which is a lot less bullish. Now we are below the 50 here on the S&P. We are below the 50 on the Dow, and we're below the 50 on the Russell. All those are concerning and reasons to still be careful. The breadth thrust, and I'll show you another reason why I'm a little bit more optimistic. You could see VIX ran right up into trend line and failed. I love these trend lines that Sagar does, and that's why this is called Q memory. So I've combined them with my tools here, and you see the dollar is riding a trend line higher. If I look at the cash markets, again, you don't see the tail to the bottom because most of that occurred before the market opened. So the market opened lower and traded higher during the session. Did come off the highs. You can see the topping tails. And again, failed at the 50, failed here, failed at the 50, failed at the 50. So as strong as a day it was, it could have been just sort of a dead cat bounce. But I think that breadth tells me something, so I'm going to pay attention to it. On the commodities front, notice that we've got trend lines heading down, gold, silver, oil, but where we have them up is the 10-year and the 30-year, which, like the dollar, came back a little bit on Friday with the PCE coming in relatively soft. Now, I showed you things that I'd be looking for to feel like the market was going higher, and we got one of those signals, the stretch signal on the spiders, the stretch on the Dow, and often these occur and give you at least a short-term reversal. We don't have them universally, but we did see them on a couple, and that's one of the things I was looking for. If you look at the ETFs, you'll see the same thing, that we got the same things on the spider and the diamonds. So both of those are giving us a signal right there that a reversal. So I've got enough evidence here that keeps me interested to think we could go higher. But I'm also not sure that that's going to hold long term, because clearly we got lower lows even on the days that we reversed. Are we going to get a higher high? I don't know. So I think there's still some risk here in the markets. If I just go into the Market MRI Pro app, you could see, and it's hard to see, but you have to trust me, that the 13-week new high, new low on each of these turned up. So it did its job. It warned us that we were getting to a level that we reversed, and we reversed. Now, it doesn't mean we're going all the way back up. It just means the market's closed higher, and some of that pressure on the oversold was eased. You can get double bottoms in this and go right back down. You can see here, these set lows, and you had a little bit lower low on the second leg down. So it doesn't mean it's over. It just means we've eased some of the pressure. And you could see this reversal was on big volume, but it was triple witching. Now, on the daily, which is what we're looking at now, all four of the ETFs are in a sell signal. On the weekly, when it comes to market, things will be much faster. I'm dealing with a demo environment. But when this flips to the weekly, it's going to show you that the Russell did set a sell signal, closing below the WMA with a negative bongo. The others are holding. So mostly positive on the weekly, a new sell signal on the daily, or sell signals on the daily. So I think caution is still warranted. I think that breadth that I showed you earlier in the slides is enough for me to have covered much of my shorts. But I did put some on at the end of the day Friday as we came off the highs. And we'll see what the market does over the weekend, the futures. These topping tails was disappointing. It really was. If I go into the market briefing, we can look at several different things. In the performance view, on the 1 day, you could see everything was up from 0.86 to 0.94. They all closed just above the middle of their range. They were in the 90 percentile until the last hour. The VIX dropped significantly here. The VXX was down 14%. Ranking 1 day performance over here, you could see that real estate, utilities, and financials, not where the strength has been, led on Friday. The strength, frankly, has been discretionary and tech. Tech did okay, discretionary lagged. Up here, we're still seeing new lows. New bulls are not built on the bodies of new lows. So if we're going to go higher, we're going to have to see some new highs. And then over here, when we looked at the S&P 1500, NYSE, and the NASDAQ, you could see the majority of the sectors were up. The over 80% of the industries were up, or around 80%, around 70% of the stocks were up. So a big reversal from the prior session. And over the 5 days, you could see the equities were down, led by the Russell. If we look at the buckets, you get 3 different time frames on my buckets. First, I'm doing them at the individual index level. The NASDAQ is done at the composite level, so not just the 100 level. You could see this shows you how high they were a day ago and how the NYSE is at 25, S&P 1500 still above 30, and above 20 on the NASDAQ and above 30 on the Russell 1000. All of them still have a lot of stocks below the Bollinger Bands. Fuel for a mean reversion to drive the market higher, but they've all come down quite a bit from where they were on Thursday night. You could see there are very few stocks on any of the indices that are above or even at the top of their Bollinger Bands. This is a weak market picture, but less oversold. The breadth view shows some improvement. It shows on the daily charts a big move up on the NYSE and on the NASDAQ. We know the volume is great, improvement in stocks above the moving averages to some point. And you could see below, although we didn't get more new highs than lows, we did flip to positive on the AD line and the up-down volume. If we go into the ratio charts, we can see a reversion to the mean. What do I mean by that? The laggards, industrial, which was falling hard, picked up some, utilities, real estate, healthcare, and staples all came up off the bottom. And the leaders, communications, discretionary, and tech, for the most part, eased some, although you don't see it here on tech. Tech rallied some at the end of the week. Energy is still very weak, as is materials. We go into the layout. I think this is one of the best approaches to top down on the market, which is how it was built to. So I'm going to look at what I call the JAS group of stocks. So I'm going to include everything in the NYSE, the Amex, and the NASDAQ. I'm going to filter them for 100,000 shares minimum average volume and a $1 price point. I will end up here with 3,334 individual stocks. If I go into top-down view, I can see individual sector performance and industry groups. You could see on a percentage basis, all the sectors were up. Real estate, financials, and tech had the biggest move. If you look at short-term momentum, which is what I like to rank things by, I'll turn this one off, you could see financials, cyclical, so staples, discretionary rather, and tech are still having the most momentum to the upside. Now, we could look at the leader, which is financials, click on it, and then all the industry groups, the 17 industry groups in financials, all the stocks will pop up. Let's go by short-term momentum, and we'll see what's up there. I'm going to go look at a couple of things that I wanted to look at. Visa and MasterCard both look really strong. Big uptrend, sideways move, pullback, and a bounce off the 50 on great volume. And so you got a CPR signal. You've got volume coming out of a squeeze, and both OBV and RS are green, which means they're above their moving average and it's not extended. Visa also looks good, looks very similar. You can add a breakout signal as well. Going down the list, Global Life showed up on a lot of my scans as well. Sideways move. I'd make sure this isn't a takeout, but it looks like it's breaking out to go higher here with volume, breakout, momentum, and EMS and a CPR. OBV and relative strength look good, not extended. One of the stocks that I own is KKR, and KKR had a pretty deep pullback, as did the other asset managers. It had a nice day on Friday. I'll be watching that. So those were some. Another one was AllianceBernstein, AB, which I believe is in the same group as KKR. Got too many things come up when you only have 2 letters. Alliance Bernstein. Let's see if we can even find it. So I know that part of the reason I'm doing this is so Praveen gets to see where I have challenges. Now, what a beautiful up move, a flag, and a breakout taking out the 50, great volume, breakout momentum out of a squeeze, relative strength, OBV or green, not extended. So in the financial services, and I believe those are asset managers, how could I tell? I could click on asset management. And now we're going to drop down to just the asset management stocks. There's 73, and there's Alliance Bernstein, and there's KKR. If I wanted to look, let's turn off financial services. You're going to see all the industry groups pop up, 144. If we look at short-term momentum, let's look for travel, asset management global, insurance brokers, paper lumber, travel lodging. Those are the top 5 groups, 1, 2, 3, 4, 5, industry groups by short-term momentum. These are the stocks in the group, and we could go through this list to look for interesting stocks, and I see some already. Bookings, pulling back towards the 50. Looks like it's ready to run. It's an expensive stock. Clearwater Paper, I don't like buying things as far below the 200, but look at the line here. It's got an EMS, a CPR, volume breakout momentum, a gap, PSAR reversal, and relative strength and OBV look good. Something happened there. I checked in the news on Clearwater. Royal Caribbean, this is probably the big kahuna in the cruise stocks. It's pulled back. Big move on Friday. I kind of like CCL, maybe because it's a lot cheaper. It must not be in the index. I'll show you CCL here. Now, when I get the third, it's easy. Similar pattern, except it's already broke out of its flag. So CCL looked good. So did the Norwegian cruise lines as well, starting to break out there as well. I can tell you when I was on my cruise ship, to say it was packed would be an understatement. I could look at who's got the most dots. Got to turn off that sort and go to this sort. Viking is another cruise ship line, breaking out. Airbnb, interesting. Below the 200, I'd probably pass on that. We saw booking. Here's Expedia, another one of these travel booking, breaking out of a flag. So what I really like about this tool, it allows me to start looking at top industry groups. I can look at an individual sector. I could drill from a sector down to my favorite stocks by industry group. So for example, let's look at technology. Technology has 511 stocks. It's got 11 groups. The leader looks like it's software. And when you look at the short-term momentum, it's not even close. So let's click on software. That gives me 156 stocks. Let's look at short-term momentum here. Nice. And the leader is MSTR, MicroStrategy. It's expensive stock. You all know these guys. When we get the stock, it's going to show up in a second. This is one of these Bitcoin aggregators. Big pull down. But if Bitcoin bounces, you can be sure this is going higher. Had a big move on Friday. Workday software. Kind of junky. Maybe there's a flag in there. APP, AppLovin, love this stock. Massive leader. Got above 100, up to 100 on the high jump. It's pulled back. Is it getting ready to run? So this is just another tool. Duolingo had big move on earnings and then is pulled back towards the 50. This might be setting up as well. So I have the ability, and I've just looked at 20 stocks in a couple of moments from a tops-down perspective. And I am a top-down guy, and I think that is the best way to find what's working. You can cut down the number of stocks you have to use. Now, from a bottoms up, I go to the impulse view. I'll use the same list of the 33, 34, and then I can filter it. And we're going to probably change a little bit of the tool Instead of highlighting it, maybe there'll be check marks. But let's limit to stocks above 500,000 shares. Price greater than 5. And you all know my favorite, 2-day force, which is 2 days of momentum in a row. It gives us 1, 2, 3, 4, 5. It's probably got my favorite couple of stocks. So let's just look at those. Celebrate, I've owned this stock for a while. In fact, it was one of the things I presented at a Wealth Charts event. I bought it back here. It's just a beautiful stepways move, breaking out again. So you have the EMS. It's already got a buy on the CPR. It's had a volume and momentum signal coming out of a squeeze. OBV and relative strength look good. It's getting extended. Yes. Doximity, I don't understand this. It's like meta for docs. I find it an annoyance as a doc, but people must be using it after being flatlined for a long time. It's having a big move and breaking out here after pulling back after their gap. Now, you can always drop the fundamental thing and see why are they moving up so much. It's probably because they're having such big earning surprises. The next street is Main Street Capital. Pull back after a big move up and breaking out. And then probably my favorite stock in the market is GEV. This is not a cheap stock. And if you just look at the PE, you're probably going to think, why is he so excited about a stock that's this expensive where the earnings don't show why? So if I look at the fundamentals, this is a spinoff after GE broke up. So it had a big surprise in October, but not growing their earnings. So we could wonder why. Why? So I do use other tools. You know that. I show you all the time the different tools. So I have this one. This is Market Surge. So remember I talked about Clearwater paper, and I don't normally buy things that are this far below the 200. Look at the earnings per share growth that's being anticipated for this year. If they really hit that $1.28 and they're growing 100 times, 100%, they're probably going to be more than a $30 stock. So that's chasing a dream, but that's why it looks interesting. GEV, GE Vernova, which is their alternative energy company. You could see this is when it started trading. Big move up, sideways move, super high relative strength, 97%. Look at the earnings. Projected was in 2024 was 260 at 200. All right. So the PE is super high at 72. Its growth rate is 262. It's projecting in 2025 686. It's only growing 163%. If it hits $7 to make it easy, forward looking, the PE is 50. If it's growing at 163, do you think the PE has to come down to 50? If you leave it at 72, it's 490, 500. I think the stock goes a lot higher, and I'm going to use this pullback as a place to enter. So I have to use other tools. I'll use them. Again, you could look at it here on the super strong stock, and the earnings are January 22nd. So we looked at top down a little bit. We started looking at bottoms up. I gave you my thoughts on the market. And let me just show you another scan that I like. Why am I looking to the upside? Well, we're going to know if this market's going to crash over the weekend because Santa's coming. 75% of the time, Santa rallies and the markets are up. Let's look at the multi-time frame CPR buy. Tell me we get. So it's scanning them, 154, and then look at who also had an EMS cross up. Just look at these stocks, FSCO, FS Credit Opportunities. Don't know anything about it. I don't know how much of a dividend it pays, but I'll show you what we can do about it. So it's kind of a gradual move, pull back here and breaking out. I like that. I like this. It's not extended. Let's look at it in trading view and see if it pays a dividend. Not a whole lot of information. It must be an IPO. Or it doesn't give any information. So I'm curious about dividends. Riding up a trend line. I don't know anything about it. I'd be curious if it pays a big dividend. CNP, Centerpoint Energy, big uptrend, pullback and breaking out. What has its fundamentals been? Makes money. Had a big beat in April 2024. Not a lot of surprises. Match. I actually found my wife without Match because I'm old. Met her on a blind date in '84 and proposed 2 days later. And we're still together 40 years later. Talk about luck. That's the big kahuna signal in life. At Two Junkie, let's look, and then the other one is that Clearwater that we looked at. All right, let's do another combination. Let's look at take away the EMI cross up, and let's look at stocks that have given us a weekly bullish reversal as well. And ARQT is a biotech. Nice little uptrend, the pullback and breaking out. CBZ, don't know anything about this stock. Kind of nothing. Funko, I know I like this one because I looked at it earlier on the Wealth Charts video. Uptrend, sideways move and breaking out. GKOS, a medical device stock, beautiful uptrend, pullback and breaking out. NMRA, what is this one? Nothing. And then Red Cat, RCAT is one of these meme stocks. You can see the big move here. So that's bottoms up where I'm applying various filters on the market. And I can look at that to the long side or the short side. In fact, I just cleared that, I think. I could go back in here. Again, I want a 500,000 volume, at least $5 for shorting. I'd want it more expensive than $5. I might want it at 30 or 40. And I could look at K-Force down, just like I look at up. And these were two that came out. Novo Nordisk, ugly. Kind of stock I like to short when it retraces into the moving average and fails. And then ROIC, Retail Opportunity Investment Corp, looks like a takeout, doesn't mean anything to me. So just to summarize what we saw, we see some breakdowns in the weekly and daily timing model that have me concerned. I balance that by the massive breadth explosion that we saw, suggesting Santa might be coming after all. The leaders index seems to have bounced off free parking. So I am cautiously optimistic going into this week. I did put on some of my contra ETFs at the close because even though I'm cautiously optimistic, the fact that we closed where we did and failed the 50 on the spiders and the diamonds, I've seen Sundays sell off and open up big down on Monday. Then we get the reversal intraday, and then we go higher. So I just want to be careful and put a little bit of insurance on because in case that happens. Have an awesome week. This one's a little shorter than the YouTube, but you can watch them both if you want. We'll talk a little bit different stocks between the two. And I will be around this week, so the videos and the notes will keep on coming. Thanks, everybody.